Welcome to episode 45 of Accessible Finance, where we demystify personal financial topics and answer your questions so you leave saying, I get it now. I'm Eric Johns.
I'm Rachael John.
Let's dive in.
All right, Eric. So I have gone through various financial articles and advice that I've come across on various social media platforms.
Okay.
And so I am going to basically give you the quotation and I'm going to ask for your thoughts.
Yes, and I will deliver them as nicely as possible. I'm really good
Yes.
at that, right?
No.
Okay.
But as even keeled as you
Yes.
can. Okay.
I'll try to be objective.
So we'll start off with some more reputable sources and then we'll kind of devolve into
Okay.
some social media stuff. Okay. So our first came from an article in Barron's and it was titled Four Unexpected Benefits of Working Past Your Retirement Age.
Okay.
Okay. So the quote is, here are 4 reasons you should consider working into your late 60s or 70s.
Got it.
1, it takes pressure off your finances.
Thank you for that. That's insightful. Did you know when you make money, you have more money?
It was very
Wow.
important.
I'm
2,
impressed.
your Social Security benefit will keep growing.
That depends on if you have 30 years of earnings, if your earnings are higher than the prior 30 years.
Correct.
You replace the lowest earning years, so presumably you'll earn more over the course of your life. But if you're working part-time or if you're working, in a
That was,
diminished capacity,
yeah, that was
you've now
not the
got
thing.
less income per year.
Because when you're
You're doing
thinking
nothing.
working past retirement age, you're probably not thinking like if you were working a very high earning, high stress, high demand job, chances are you're probably not still working that job at 70.
Right. You want to be
So
finished with that, I would
you may
expect.
be doing a part-time,
Scaling it back,
correct,
consulting, that kind of thing.
correct. And I actually came across an article I didn't quote in here that someone was advising people like, hey, if you love golf, work part-time in the golf shop so that you're earning money while you're retired. And I'm like, okay, but if you're working part-time in a golf shop, that's not going to help your Social
I
Security.
would.
If you were,
I have a lot to say about that, but
okay, well, yes,
none of that is.
I didn't think
That's
that
not
was
exactly my area of
okay.
expertise, but I
Yes,
think it's nonsense.
right. Okay. Third, it's good for your health, specifically dementia, as
Okay.
utilizing your brain has been shown to help kind of stave off some of those, um, medical declines.
I agree,
But
but that is a non-unique argument.
I agree.
Crossword puzzles also help your mind
Really?
and do not require you to move at all or work
So what
in any
I'm
capacity.
hearing is that
I am
you
not
are going
doing
to do
crossword.
crossword
I
puzzles with me.
dislike them, Rachel. I do not like them.
Maybe a logic puzzle would be
I
fun.
would like to not do those
Okay.
things.
What
Video
about when you're
games.
60 or 70?
You might have a better shot because I
Okay.
might not know what's happening. You could
No,
probably,
you're
you could
supposed
probably
to
get me to comply
you
with whatever you
you're
want.
supposed to do them before you don't know what's happening. Okay.
That's
And
fair.
then finally, it helps maintain or even increase social interaction at a time when not
I've
everyone
heard that.
necessarily
I've
is.
heard that's true. A lot of people enjoy interacting with their colleagues, and one of the things that I've heard, this is just community wide. You'll hear this if you listen to retirement planning podcast, kind of a thing similar to ours, right?
Mhm.
Um, is retire to something. Essentially, make sure that you have something a plan, an idea of what you want. Like people will talk about routines being important, socialization being important. So your lunches might be with old friends, relatives, that kind of thing.
Mhm.
But you want some kind of social engagement, right? So make sure you're retiring to something, have some ideas of activities that you want to engage in,
Correct.
particularly with your peers, so that you're not, you know,
Yep.
lonely and
Well,
despairing in your own age. And you
there
want
are a lot of like, so pick it up. Oh my
don't worry, I've got more. We're
I was
prepared.
going to say we'll
Let's
never make
roll.
it through the next one.
Nope.
But there are a lot of like social clubs and activities that you can go ahead and enlist in if you're looking for
Right.
that kind of outward
Mhm.
socialization. Okay, so overall thoughts on the 4 unexpected benefits of working past retirement age.
I mean,
Clickbaity?
yes, obviously.
Okay,
3 of them don't even like, they're not even real.
right.
The
I mean,
realest one is like social pressure. The most comical is that you make money.
right. Well, yeah. Okay. Okay.
Takes pressure off your finances. Yes,
So
that's true.
does
So does
responsible
income stream.
investment, right? Exactly, and
Yeah, every
responsible
income
investment
stream does.
or advanced planning for that time, right?
Yes. I just don't think
Um.
it's particularly insightful.
Okay. Ready? Next
Yeah,
up,
let's
we've
hear
got
it.
Forbes.
Okay.
Okay. The article was titled How to Deal with Debt Collectors.
Okay.
Okay.
All right.
The quotation is focus on newer debt first.
Okay. I mean, there's some truth to that, right? It drops off what, 7 years, I
Yep.
believe. So Yeah,
And
there's
by
truth there.
drops off, we're talking your
Of your
credit
credit
report.
report,
Yeah,
correct. So it would theoretically no longer count in your FICO, score
correct.
calculations or anything. So, yeah, that's sensible. I'm in.
Right. But I think that it's important. And the reason I picked this is because I think sometimes, and there's later on, we'll discuss some of these rules of thumb
Okay.
that feel very one size fits all. And so if you have various debts, I think that while it's important to look at what your newer debt is, to assume that paying off that newer debt is always better is problematic.
Absolutely. I didn't even think about the fact that the interest rates could be radically different. One could
Correct.
be a mortgage and one could be a,
That was my concern, is that
yeah,
not all
the
debt is
payment
equal. So
yes, the
timing's
payment
not
history
the only variable.
right, the payment history is gonna matter the most for your FICO score, but that honestly, at the point in time you're in collections on multiple debts, that should be the least of your concerns.
Exactly.
Your score's already tanked, like, nobody's gonna
Correct.
lend you money anyway.
Correct.
So, at this point, we're trying to yeah, that's if we're talking snowball versus avalanche
Right.
in terms of, I don't know who popularized the terms, I believe it was Dave Ramsey, but I don't wanna misattribute something, so, disclaimer, sorry, didn't mean to do it. Um, but snowball is the idea that, I believe snowball is the idea that you pay off the smaller nominal outstanding debts first, and the idea that you build momentum.
Right. And we talked about this in a
Yeah,
previous one that there's
correct.
a psychological component. I mean, my checklist that I have on an anchor chart stuck to my wall helps further the notion. I think that just like seeing and visually like
Yeah,
getting that
seeing things
in,
moved off the list, right?
correct.
You have
It
one
is
less
helpful.
yeah, one less liability account, you're
Correct.
happy about that.
Now
That's
it's
gonna have a
helpful to
cycle.
some more than others. And so if that's what it takes for you to be successful in paying off your debt, so be it.
Right. It
But
might move the needle for me, but I would
probably
just be
significantly less
I
than
would
that,
foot
I
to the
would
f
think.
yeah, I like to believe that it wouldn't, and even if it were, I'm
It would not,
avalanching, which means I'm
yeah.
paying off the highest interest rates first,
And I think that that's what's
and we
critical
would
is that
advocate our clients do the same,
correct.
provided they're able to, just stomach the fact that they're not gonna get these, little dopamine hits when they pay off the
Exactly.
initial, um,
Exactly. So that was the prime reason I
amounts.
really picked this quote because the entire sentence just says focus on newer debt first.
Correct.
And my concern is
I
that
agree,
without the
yes, yes.
caveats, it
It's
can,
narrow, you're right.
yeah.
Good call, good catch.
Thank
Well
you.
done.
Mhm.
Well
All
done.
right. We have another Forbes article up next. It is called, this one you're going to have fun with. It's called How to Technically Analyze a Stock. Okay.
Okay.
Ready? So,
Because
quote,
there's one method only.
quote.
Go
Are
on.
you ready?
I'm in.
I came across this one, by the way, from a connection on LinkedIn
Okay.
of somebody who purports to be a financial planner,
Okay.
um, but in reality is a insurance salesman.
Great.
Yeah.
Great.
So it was an article that
Love
was,
those people.
yeah, we talked
Wish
about
there
that
were
before.
more. Yeah,
Right.
no, I'm kidding.
But this was an article that was being shared.
Okay.
And so I clicked on it. It brought me to the Forbes link. And again, it is titled How to Technically Analyze a Stock.
Got
The
it.
quote is being able to perform a technical analysis on stocks can add value to your portfolio because it uniquely provides insight on the timing of both purchases and sales. Thoughts?
Yeah, there's so much wrong with that.
Yeah.
Technical analysis is actually like a reasonably well fleshed out term in the stock
Mhm.
analysis world. And we're talking mostly about like graphs
Right.
and ratios and fundamentals. Um, and I'm not hearing any of those things there.
And I'll elaborate a bit. Okay. So I
Right.
pulled the quote because the quote is concerning and there's a lot of red flags, right?
Hmm.
Further down in the article, I kind of synthesized what it was saying, but it discussed that there are three types of analysis that you can do on a
Okay.
stock. The first type is your fundamental
Fundamental
analysis,
analysis. Yep.
right? Which is earnings per share, price to earnings ratio, etc.
Sure.
The second type that they recommended is sentimental analysis, which I know you're really big on.
What?
The attitudes of investors towards the company. I know.
That was included in an article that
It
purports to
was
be like a
how to analyze a stock. It was saying this is one of the three
ooh,
types of analyses.
yeah.
And then the third analysis, which they spent the most time talking about, is
It's
what they
technical.
call technical,
Okay.
right? Which is
Yeah, yeah, yeah.
um
Head and shoulders, graph movements,
correct. They called it
historic
the
price,
candlestick charts.
fundamental performances. I mean, the chart performance is essentially gonna past performance is
Correct.
gonna predict. It's gonna be
Right. So
predictive of future outcomes.
it
With
assumed that the investment or the information
yeah,
that was required to assess the company was already reflected in the company's current share price.
right.
So it typically is used to assess short-term investments using these candlestick charts. And they tried to elaborate on it. It got incredibly technical
Yeah, so we could spend a lot of time on this one, right?
for sure.
This is a big deal. This is a big deal because the underlying premise here I have an issue with, or the implication, I guess I should say. It's not necessarily the premise. The implication is that it's even possible for an individual to essentially
Time the
beat the
market. Yeah.
market first to beat the market and to do the first to do the analysis correctly, right? I have a lot of letters behind my name,
Mhm.
and I wouldn't say that I am amazingly uniquely adept at evaluating stocks
Right.
more than the definitely not more than the guys and gals on Wall Street.
Mhm.
You know what I mean? Like I would not I don't believe that most individuals can even compete on that level, and the implication that you can read an article or 2 and somehow be in the
Master the
game
skill, yeah.
is mind-blowingly irresponsible to me. Yeah,
And I do think that the article did a really weird job of giving someone a false sense of security after
that's
reading
the
it,
issue.
that they would be able to do
That's
this.
the issue. I mean, I
I do
I
think
had a
that
conversation with somebody the other day that was talking about their positions in NVIDIA and Coinbase and these things, and, like, very casually, like, "Yeah, that's what everybody does," and I'm sitting here like, "N no, like, it's
right.
not." Like, I hope you understand that your risk tolerance needs to be like off the charts high. You know what I mean? Like you need to be doing this with the understanding that you're essentially playing blackjack.
Well, that's what I think is hard. I don't think that people are able to appropriately understand the comparative risks between investing that way and
Right.
investing in alternatives.
So
I do think that there's a decent number of people who will say, like, okay, maybe I do understand it's a bit risky. I still want to play a bit of riskiness, right? Like, there's still that draw to the whole like gambling mechanism that is the stock market and
right.
picking individual stocks. But what percentage of your portfolio are you willing to do that with?
I hope not much.
Yeah.
I hope the smaller the better. There's a couple things, right? So obviously we don't ascribe to technical
Correct.
analysis. We're if you believe in semi-strong efficient market
Which
hypothesis,
we do.
which we have,
Talked
defined a
about
couple
before. Yeah.
times, it's essentially the notion that unless you are insider trading, we're saying that insider trading can beat the market
Yeah.
on a risk adjusted basis, right? If I'm the Google CEO and I know that I'm about to close like a branch of my business and I short my stock, probably have a pretty good chance of winning that bet,
Yeah.
right? Or if I know I'm missing earnings by a significant margin, then I short my stock. Or if I know I'm beating and I buy calls or go long in a position, then sure, yes, we believe that insider trading enables outperformance on a risk adjusted consistent basis.
Correct.
Short of insider trading, we do not believe that fundamental nor technical analysis provide any sort of an edge on the market. That which means you will not beat the market on a risk adjusted basis consistently over time. Like, yes, you can roll the dice and win a couple times for sure. Like, I mean, if you literally take
And
a coin, flip it, you might hit heads
that's
twice or 3 times even,
amazing.
right?
Right.
And yes, you might be winning, but on a risk adjusted basis, for the amount of risk that you're taking, right? You're not going to win. That's the belief. That's the fundamental hypothesis, right? A semi-strong efficient market hypothesis. So we don't even think technical analysis works on that level. So again, those are two main critiques, right? One, it instills this unreasonable sense of confidence in you.
Right.
You've read this article, now you understand how technical analysis works.
Well,
Go out and do
yeah,
it
it
immediately.
feels like you don't need any kind of knowledge other than like, I mean, the article is titled "How to Technically Analyze a Stock." Now I've read it. I know how to do it. I can now go and do this.
Right. Ooh, don't love that.
Yeah.
Okay. But then it essentially flies in the face of semi-strong efficient market hypothesis, right? And then the third thing I would say is that well, there's a number of thirds that I would say, but market timing is not something that even the best, right? Even hedge fund managers get correct on a consistent basis. And
Mhm.
again, this is like a bit of a piggyback on semi-strong efficient market hypothesis. But if you were able to do this consistently, you would be making hundreds of thousands, if not millions, probably millions or tens of millions of
For sure.
dollars managing your own hedge fund because no one's able to consistently do this. Algorithms, supercomputers, who would you name it, that are all programmed because technical analysis, one of the things is it's data driven, right? It's based on the past performance of the stock. So it's based on charts and
Mhm.
ratios and the
Which
ratio
makes you
between the
feel much
ratios.
better about it,
Oh, for sure,
right?
right? And it's supposed to be like it's kind of quasi-scientific and that it's using a lot of data,
Correct.
right? And it's
There's
using past
tons of data
performance
out there,
for
but
sure,
is the data is the
predictive of
way
future values, and we would say
correct.
no, it's not.
Correct.
And academia, I believe, agrees.
Yeah.
So, right, it's just it's kind of wild. But the
It is a
market
lot.
timing, the market timing component is another problematic, uh,
Yep.
problematic claim there.
Say your quote.
But oh, timing the market beats timing the market.
Yeah. Time just to be clear, because he mumbles a little.
Time in the
Yeah.
market beats timing the market,
There we go.
right? So market
Yeah.
participation over a long term is far more important than
Correct.
thinking that you can jump in and then jump out and then jump back in at the right
Right.
times. You have to be right multiple times. You don't just want to buy low. You have to buy low, then you have to sell high, and then you have to know when you're buying low again, right? Like
Correct.
you have to ride all of the waves and then predict them correctly. Like
Correct.
good luck.
Well, and exactly. And at the same time, we have also talked about the importance of whatever philosophy you're engaging in being something that allows you to sleep at night as well.
Correct.
I can't imagine that the majority of people can stomach that on a at all, much less on a long-term basis. So
Absolutely.
definitely a lot of things there. And so if it's something you're interested in, I would at least urge that you would read more than the one article and feel like an expert in
I would take a
it.
couple masters and graduate level classes in finance before
Yeah.
considering something like
Even
that.
try. Yeah. It was just I was floored.
Oh, I
Um,
still am.
I know. I was excited to show you that one.
Yeah.
I probably should say that one for life. Okay. Our
Wow.
next
It's a lot of
article
fun.
is from Business Insider.
Okay.
Um, it is titled Three Bank Accounts Rich People Use to Build Wealth That Are Available to Anyone.
Okay.
Are you ready? Your mind is about to be blown. Account number one, Roth IRAs, including backdoor Roths.
Everybody.
Yep.
This is not unique.
Account number two, using your 401k to the complete match.
Wow.
Yeah,
It's
super,
not like that's on
super
the
rich.
front page of literally every planning article ever written. It's like the low. I think that's like the singular thing. If you had to say if
Yes.
the for
What
the
what
American
do you do?
public, yeah, what should you do?
What?
It's always get the employer match.
Like
That's
the
it. Because
majority
it's
of
true. It's true. It's
correct.
absolutely correct.
Correct. And I would say that the majority of our peers
Yeah,
have
they
their
know that.
assets held in a 401k.
Mhm.
And so then the third account they discuss is a brokerage account specifically invested with like index funds.
Okay. Right. This is all
Super earth
just
shattering article
no,
there.
I mean they need to fill the space, right? They
They
have to write
do.
about something. So I get that they're writing about this, but this is hardly news to anyone. And that's not it's not even it's none of it is unique to the wealthy. I'll say that
Well,
for
that's what
sure.
that was my concern
That's the
there. I
biggest deal,
think that the
right?
misnomer in the title of saying like these are the rich people strategies that you guys can take advantage of too. Like hopefully if you've listened to our previous podcasts, you're aware of all of these options for
Most
you.
of the uniquely are I mean, most of the uniquely um applicable things to the wealthy are gonna be private
Tax.
funds,
Oh, yeah, yeah, yeah.
um, hedge
Investments.
funds,
But I would
things like
say
that. But just because they have higher expense ratios,
sure.
they'll typically have higher minimums, like 200, 300,000 minimums or whatever, right? Like they're gonna have lots of dollars they have to put in. They're usually locked for some period of time.
Okay, but I think the
Entry and exit
majority
barriers.
of
None of those have the things that we
correct.
would consider strictly associated with the wealthy.
Well, that's why it says that are available to anyone. But I think that the majority of where the margins are for, you know, wealth are not in investments as much as in, I mean, they have more to invest, so they're making more on that.
Sure.
But like the tax planning piece, right? And tax savings and creative uh
Honestly, the
planning like that.
most many of the high net worth individuals that I've interacted with don't even bother with those kinds of accounts. They're not that interested. I mean, they have taxable brokerages, but like the 401k and Roth idea, some of that is just either before their time or
Yeah,
yeah, it's after their time, I guess you would say, right?
correct.
It's just newer stuff, and they're just like, I don't need it, so I'm not going to mess with
The
it.
Roths for
And they're not
sure.
wrong.
We have an episode about that that talks a lot about how
Yeah, there's some apprehension around Roths, Roth
1,000, yeah,
conversions, what's going to happen, like could all
correct.
this,
It just it
I mean,
feels like it's
people don't understand it.
yes, it feels like
What
it's
is
something
Form
that like
8806?
young people should do.
Right.
And just for young people. Yeah. Um, okay. So
We could save it, huh? We're gonna have to do a two-parter.
we definitely are.
Let's
Which
do it.
I have a number of more for you
Yeah.
to delve into. Um, okay, so did you want to end there or you want to do one more?
No, it's in there. And so guys, look, if you ever if you hear something that you think is well, maybe I don't want to say troubling, but you're just kind of like, that doesn't maybe sound
Yellow
right. Put
flags.
a bias.
Some yellow
I'm
flags.
interested. This is fun.
Yeah, sure. Just because I do think it's so difficult because I think, some of the articles we were pulling from were Forbes, Business Insider,
Right.
Barron's, like they're coming from really reputable websites,
Yeah, that have written some great articles.
correct? But there are also other writers that contribute to these articles that have clickbaity type stuff or have headlines that really draw you in and either would give you a false sense of security that you suddenly know something magical or they purport to give you this like inside scoop on something that just isn't. So if something doesn't feel quite right, it may not be, even if it's on Forbes. So by all means, please, please run it
Right.
by us because at this point, nearly anybody can write anything.
Correct.
So
Absolutely.
yeah.
All right, guys. So if you enjoyed today's episode, please review the show. And if you have any topics you'd like discussed or financial problems you'd like solved, reach out to us at podcast@equilibriumfp.com or visit our website, equilibriumfp.com.
Till next time.
Thanks, guys.